Welcome back to another episode of Drinking in the Dark with Frugal Tiger, where we go over major market making news to prepare you for the upcoming week. I want to talk about a few names, but in particular, I want to talk a little bit about Chinese ADRs. A lot of them are making moves one way or the other, and I think it's going to be important for the upcoming weeks as the US-China trading talks occur and tensions are trying to get resolved there. That's all happening right now. So Chinese ADRs are definitely big in play right now. I might actually put this in the beginning of the video. I don't know. I'll decide while I'm editing. But I want to talk a little bit about Chinese ADRs because I think I'm going to pick up some JD.com. I bought more NEO this week around $41 a share after I sold my stake in NEO around $45 a share a few weeks back. A smaller size. But the one thing I want to mention about the Chinese ADRs is I think from now on, when I go to buy the Chinese ADRs, I am going to keep it to call options only. I'm not going to buy the underlying security. I'm going to buy call options. This limits the amount of capital A that I'm exposing to in case of fraud, in case that the bank that claims that they own the underlying Chinese shares don't own shit, which is one of the risks with ADRs that I'll try to bring up, where there's another type of fraud where the actual shares of the ADR don't translate into the shares of the underlying company, which is very possible. And at the end of the day, the Chinese government basically owns all these companies. So there's a lot of risk. On top of that, you guys remember I was trading Luckin Coffee last year. Now, I wasn't holding Luckin Coffee. I'm freaking super lucky as hell when the whole scam came out, but Luckin Coffee completely crashed. It jumped super high and then it crashed over fake in-store sales numbers. So keep that in mind. It got delisted. Most people lost their shirts, their pants, their fucking underwear too. So they were just walking around naked around the streets after that. The reason I just want to forelay this warning is what happened to Luckin Coffee can happen to all these names. We don't really know what's going on with NEO. We don't really know what's going on with JD.com. We don't really know what's going on with Penaduo. I don't even know how to pronounce that. The ticker is PDD. If someone can help me with the pronunciation of the underlying stock, I would really appreciate it. And that's the next stock I want to talk about. If I do decide to buy PDD, which has actually displaced Alibaba just recently as the largest Chinese website, like e-commerce website, I might, if I do buy PDD, not to be confused with P. Diddy or Puff Daddy, I will probably buy it only through call options, just in case I wake up one day and fraud is announced. I'm only out the premium for the calls and not the price of the overall stock. So I will only buy these ADRs where momentum's in my favor, and I will buy them using call options. So PDD, NEO, XPEV, and JD.com. Keep all those in mind. I'm not buying XPV right now. The other three are on my to-watch list. That was my ramble about Chinese ADRs. Here's the other thing I wanted to really mention about these ADRs. A lot of people don't realize this with China, but buying stocks in China are equivalent to like the 1920s in the US. If you guys don't know what happened in the 1920s, the 20s were referred to as the Roaring 20s. So, and then we had the largest stock market crash in 1929 where the price of stocks dropped like 90%. It was an insane number. The reason I bring this up is I don't ever foresee a situation in the US where the stock market will drop that much. I just flat out don't think the government is going to allow that. They're just going to print money like crazy. But even beyond that, is we have a very robust financial system right now, meaning a drop in the overall markets. There are all these massive pension funds, 401ks, mutual funds, hedge funds. Well, especially the large funds like BlackRock, Vanguard, the whale of whales in this industry. They all have basically everyone's salaried money, or every 2 weeks when people get a paycheck, that money goes into a 401k or something. They take that money, invest it. And there's always that constant flow of money that will keep pressure on pushing stock prices higher. This massive institutional buying that occurs using everyday people's money. That same infrastructure isn't as set up in China. Do they have the concept of 401ks and stuff like that? I've been told it's not as robust of a financial system. There's a lot of retail gambling, a lot of retail speculation. I honestly don't know for 100% facts, but they don't really have anything quite like Vanguard or anything like that. Otherwise, they wouldn't be trying to list their companies on the US stock exchanges because of the established financial system that we have here. So keep that in mind, that there's a lot of gambling and rampant speculation in these Chinese stocks. If you trade them on momentum only, not so much from the purpose of an investment. I'm stuttering right now because I'm kind of drunk. Okay, so let's go over the rest of the names really fast. Let's go over some names from before that you should still pay attention to. Obviously Tesla, obviously Fuel Cell. Plug Power, let's talk about that a little bit. This past week, Plug Power had realized they had made some major accounting errors. Their stock actually plummeted 15-16%. The tape actually held up the second day and a third day to the point where it's almost slightly bullish from the tape side. The market actually started buying back Plug. Plug dropped, I think, as low as 35 and change. But by Friday, it had risen to $38.28, around there. But the main thing I kind of want to bring up here, just because the tape looks super bullish on Friday, just be a little cognizant. Accounting errors are a huge deal. I wouldn't necessarily just brush it under the rug, say, oh, the market looks like it shrugged it off. The market sometimes takes its sweet time to shrug it off, and there's a variety of powers at play. Sometimes people temporarily push the stock so that a lot of big time players holding the stock can safely offload the stock. There's a lot of games like that are played behind the scenes. So accounting errors are kind of a big deal. I actually own 800 shares of Plug right now. I actually did buy the dip on Plug Power. Having said that, my normal size on Plug is around 4,000 shares. And 800 is the maximum I'm willing to go to on accounting issues, because it is a really big deal. $38 a share. It was at like 72, 74 a month ago. Not 1 month ago, but probably around January is around $75 a share. So this week, watch Fuel Cell. I think if you were planning on buying Plug Power or allocating more money to Plug Power, Fuel Cell's off the highs. Maybe consider buying Fuel Cell. A lot of analysts upgraded Plug Power before this accounting error. So if you do want to buy it in very, 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 very small size. The tape is still looking okay for the time being. It seems to have shrugged off everything. Anyway, moving along. Tilray is kind of in a trading range. I thought it was gonna break out a couple days ago. I bought into it, and I'm stuck holding it. I'm holding it profitably, however, but yeah, it's at $25 a share right now. I keep sizing in and out of Tilray. I am excited to see if cannabis starts really catching a big bid. Tilray, Apria are names I'm watching. Outside of that, Palantir. Now, Palantir is a name I'm still trading, but I have a little bit of a confession to make. After I liquidated all my bank holdings or whatever about a month back, Palantir is my pick right now. Be very cautious. I don't want you guys to do the same thing, but about 30% of my money is now tied up in Palantir. My entire money, not my day trading money, not my swing trading money, but I think the market is very top heavy, and over the last year, I've just been picking names as opposed to buying the overall market. My money is no longer split across banks. 30% of it is tied into one stock, and that stock is Palantir. So we'll see how that does. Hopefully it doesn't bite me in the ass. There was a case where when I tried to do something like this, it's bitten me in the ass. But Palantir is a major play of mine. We'll see how it does. There's still some insider selling going on right now in Palantir, as insiders are able to offload their stock. So just be cognizant about that. I don't necessarily recommend you guys start piling into Palantir. Just do your due diligence, understand your risk levels as an investor, and figure out what you want to do. I have Space now as a long-term investment. I still day trade Space as well. Square, Snap, and Twitter, I kind of categorize this all in the same group. They had a huge momentum breakout, but although they've come back after the huge technology dip where we corrected about 10% on the Nasdaq, Square, Snap, and Twitter don't have that same strength on the uptrend. We can see how it plays out this week, but if we don't see that uptrend continue, I'm taking it off my list of trades. Fastly is actually might be making a bid higher now. I don't know exactly how I feel about this name. I personally feel like it's overvalued, but I've said the same thing about Airbnb and DoorDash, and they just seem to keep running. I would just stay away from Fastly right now. And Zoom is another one where I think with the lockdowns in play, just be cognizant. It's half of its highs, but it's still a very overvalued company. We have Clubhouse and some other names that are kind of not necessarily in the same space, but potentially coming in to take some of the glory from Zoom. MongoDB's been selling off. Don't worry about MongoDB. It's probably coming off my list. I'm probably not going to short the name either because every time I've tried to short stocks, I've been just getting slapped in the face. All right. Let's talk a little bit about this upcoming earnings season, earnings week. This upcoming earnings week is a little light. Adobe's on Tuesday. That's going to be the only name on Tuesday. Nothing on Monday. Wednesday, we have Paychex and Riot. Always keep Riot and Mara on your watch list. Riot on Wednesday is the name to watch. On Thursday, we have Momo Sava. Momo, ticker MOMO, Sava, S-A-V-A. Sava has had a huge breakout. It's a little scary, the size of the breakout since January. And we have ticker symbol BLNK. Other than that, I don't really notice anything else earnings-wise that I'm really paying attention to right now. Let me take a look. There was something that happened with Uber. Had a little bit of a dip a few days ago. Looks like it's getting bought back. So the tape is still a little bit bullish in Uber's favor. We'll see. I would pay attention to Uber right now on the tape. You might be able to get a little bit of a swing trade in on Uber. Keep in mind, it's 52-week highs around 64. It's at 57 right now. If you want, maybe take a shot at that. Anyway, that's it for me this time. Basically, a lot of the similar names as last time, but pay special attention this week to PDD, JD.com. Oh, CCL, Carnival Cruise, is breaking out, and that's a huge recovery play. I don't really want to talk about CrowdStrike. CrowdStrike's didn't really do that much. Some people might want to buy the dip, but I think it's a little scary to buy the dip on this. The valuation's still pretty high. So maybe avoid CrowdStrike. I apologize if I'm talking in circles a little bit more than usual. I'm a little bit drunker than usual. Hey guys, I wrapped up the video a little bit earlier than I thought. There are two quick things I want to quickly discuss. Don't want to keep it too long. Two IPOs I'm watching this week. DigitalOcean, ticker symbol DOCN. They're an IT services company. I've used them. I've actually, the site's down right now, but I've hosted the Frugal Tiger website using DigitalOcean. They're one of the better platforms to use for hosting your own website and other things. Obviously, a lot of other names have come onto the market, and it's a very competitive space. I'm still watching it. It could move quite big after IPO, but a lot of this depends on its IPO price. If it IPOs like Snowflake, I think I already told you the story of Snowflake. I thought Snowflake was going to IPO at like $80 a share. It was more than 2.5 times that. So if it's like that, I'm probably not even gonna try to attempt to buy this. But I'm watching it. DOCN, DigitalOcean. The next ticker I want to talk about is Vizio. What ticker is Vizio? Let me see if I can find that. I think it's VIS. So just want to clarify one thing with these IPOs. Right now, Vizio is set to IPO on the 24th and DigitalOcean on the 23rd. With these IPOs, they can change. So just keep in track for the overall week. These are expected days that they're IPOing. There was a recent IPO, I forget the exact ticker, but there was a recent IPO that didn't IPO on its exact day. And also even these tickers that I'm gonna give you, it's what it's expected to be, but it could be different. So for Vizio, the ticker is gonna be VZIO. They make these really shitty low quality TVs, but that's okay. They're really cheap, and I actually bought one. They actually have like their own advertising program, and that's actually how Roku is trying to make money. So in some ways, this might be a competing product to Roku. Not exactly competing. I think a lot of Vizios have Roku installed on them. But they have like an advertiser subscriber kind of model. So I'm pretty interested to see how this plays out. I am not necessarily going to buy this one either. It all depends on how it opens, and if the stock starts pushing higher, I might join in for the ride. Obviously, you can't short these names because they just IPO'd. Anyway, that's all I wanted to talk about. This was a late ad in the video, and best of luck this week. Thanks. See you all next week. I just want the money.